go through positional call ratio spread strategy. So, the part of our Nifty backtesting results series. So this is we covered the positional short strangle and straddle. So now we will cover the positional call ratio spread strategy. After this, we'll cover the positional put ratio spread strategy and the positional jade lizard and the reverse jade lizard strategies. So, okay, so this is a positional call ratio spread strategy, and if you see, this is a Jan month. Okay, so this is a Jan month daily chart, and the market is bearish in this month. Okay, and whenever you have a bearish view for the market, then you can deploy this positional call ratio spread strategy. Okay, so what is required for initial deployment of this strategy? So in the month of November, actually Nifty had only 25 quantity, and the margins required for less during that time. So the margin that time was only 82,987 was required, and you have a probability of 70% winning and profit making potential of 10%, where but your max defined losses again undefined. Okay, so what you do in this call ratio spread strategy, you sell two calls, okay, and you buy one call. That is why it's a ratio spread strategy and call ratio spread strategy, because you're dealing in call ratios. Okay, so 2 is to 1 is the ratio here. Yeah, if you want, you could do 3 is to 1 also, and it's a ratio. So 2 is to 1 is the ideal ratio which is used, and you deal in calls. So that's why it is a call ratio spread strategy. So when you're selling call, your view is that the market will be below 23,950. Okay, that is your view, and even you're hedging that position basically with the 23,900 C. That even if market comes or breaks your 23,950, you will gain from this 23,900 C being going up. Okay, and this is the same expiry. It's the same expiry because it's a positional strategy. What we are doing here is on Jan 1st we are coming and we are taking the expiry of the 30th Jan, and for our positions. Okay, if you want to get into delta, theta, and all that, you can get here. Theta is 6.1 for this, and you need to multiply it with the lot size. Gamma vega also is there here, so you can get into the details if you want. But the main thing in this strategy is, so if your view is that market is going to be bearish, right? So this is the spot which is at it is at 23,660. So that's the spot. 23,660 is the spot, right? And if you feel that market is going to go stay below this 23,660 only, then you can take this strategy. Okay, and yeah, but the good thing here is you'll get some uh, around almost one standard deviation in the opposite direction also. So market is at 23,660, but even if the market goes uh, you know uh, till 24,265, right, till 24,265 also, you will be still in profit. So that's the beauty of this particular strategy, that if the market goes in your direction, you still make profit. You definitely going to make profit. The market is at that same spot, you're going to make profit. But even if the market goes against your view to a certain extent, market has to give you a profit before it gives you a loss. Okay, that is the beauty of this strategy. And around one standard deviation, or 0.75 standard deviation in the opposite direction also, you have a leeway in this strategy, and your returns are more actually in the opposite direction. If you see this, there is a triangle here. Your returns are more actually. So that's a beauty here. If sometimes what market does, it goes down and then up, right? So that uh, sort of thing also is covered in this. Okay, so if the market goes down and then comes up also, you're in profit. The market goes up and then goes down also, you're in profit. If the market stays there, however, you will be in profit, because this will become zero on the expiry day. Okay, so that's the call ratio spread strategy, and when we tested it for Jan month, it yielded 7.6% returns for the month. So that's it. This is a positional strategy, but yeah, it does have a undefined risk. Uh, so just keep that in mind that there's an undefined risk also when deploying it positionally. Feb month, if you see, Feb month positional call ratio spread again. Feb month was also bearish, but if you see here, this month, if you see, it went up and down. Okay, so that is what will be covered by this strategy. So up and down. So initially you are wrong, but eventually you are right. Okay, and yeah, so if you see, this margin has increased now because from February the lot size has become 75 quantity for Nifty, and that's why the margins have increased to 2.54 lakhs instead of 80 90,000. The pop is same 70%, around 71%, and the profit margins are also same 8 to 9%. Here also you do get, if you get in the opposite direction also around the 0.75 standard deviation, you know benefit. Even if you were wrong also, you still have the potential to make money till 0.75 of standard deviation. Again, this is a call ratio spread, so we are dealing in calls only. And the view is, the market will stay below 23,550 here. And even if it's wrong, around 23,500, you'll make some money. That's a hedge, basically. The break even is 23,822. Okay. So 23,822 is your break even. The mass spot price is 23,244 currently. So around 250, you can say the spot. Around 300 points above, you are going and saying, market is going to stay below this, and shorting two calls there. And just 100 points or 50 points below, you are just buying a call there, which is giving you a break even of 23,822. Okay. Yeah. So the margin has increased here almost three times because the lot size has increased three times. Yeah. And when we deployed it for the month of February, again, if you see, it has generated 6.6% returns because our view is correct. Even though initially we are wrong that the market is going to be bearish, it was bullish and then it became bearish. We are still right at the end of the month, so we did make money. And again, this is a positional strategy, so we come in the starting of the month and we deploy the expiry last week. We deploy. Okay. So let's do this in real. So January and February, right? So our option simulator. Let's go to January. Hmm. Yeah, so January. So how do you get a view that it's going to be bullish or bearish? That depends on your. You do some sort of higher time frame analysis, or you do macro analysis. Based on that only, you will get such views. Okay. So if you see, this is a bearish one. So yeah, yeah, it's there under neutral. Yeah, but this is a call ratio spread. So you see 82,000, pop 70, 9.2% you can make. Everything is in calls. Two shorted, we have two calls shorted and one call we have bought. So this is a positional strategy. That's why we have taken 30th January. We came on Jan 1st and taken the 30th January. Let's do this. Okay. Daily we will run till expiry. Let us see the results. So initially you're seeing losses because yeah, this is too much loss. But yeah, as long as it doesn't breach your this level, you are good. Okay. Once it breaches this level, you need to make some adjustments, which we will not discuss as a part of this video. Adjustments are totally different topic. So see, you're already making 6%, 7%. So you need to exit at this time. There's no hard and fast rule that you need to stay till the end of the month, because this is all same, right? So no matter you stay, unless it comes here, you won't make extra money. Okay. So that's we made around 7.8% for the month of January. Let's see the month of February. Okay, February Saturday, so third will come at 9:21. We'll deploy this strategy, and 6th February. So let's go to 27th February and put a call ratio spread. This is a call ratio spread, and the margin increased here 2.54. 75 is the lot size. Pop and profit percentages are same. Let's run this. Okay. Yeah, so we're running this again. See, as long as it is within this, now you need to be cautious. Okay, so once it comes here, you need to make. But it's as long as it is in this range, you are okay. Okay, and you need to be confident of your view. Okay, some view you have taken, you need to be confident, and you need to put some money on the table. That's the risk you need to take for the reward you are reaping. Yeah. So this made around 8.9%, which is a good return. Okay. So that's the call ratio spread positional strategy, guys. Thanks everyone for joining the call. Have a nice day. Bye.